Before we get into today's program, I just want to apologize for some of the technical issues that we've had, including the green coming up with an issue being displayed, as well as the webcam. So anyway, moving on. Hello and welcome to Anchor Point Trading Adventures, where I apply my knowledge in the stock market and share with you some of my adventures in the trading world. I'll give you some insight into my decision-making process, which depends widely on market conditions, of course. I've been doing this for about 8 years, and I'll remind you the average trader takes about 5 to 10 years to figure this out and to see equity, steadily growing equity curve in their account. Don't be discouraged. Keep learning. Don't revenge trade. And don't even trade with real money, guys, okay? Until you have a handle on how to do this with fake money. I've been doing this long enough to be comfortable with it. It's not something you can do overnight. It's not something you can watch a couple YouTube videos over. It's something you really have to work hard for. I'll tell you, I've been doing this for 8 years, and I'm hoping to see my first green year. And the reason I'm making these YouTube videos is because, well, I'm finally in a place where I'm comfortable enough in the market and I feel like I have a good handle on things, and I'm ready to teach people as I continue to learn, because I'm still learning. I'm always going to be a student in this, and that's just how you have to think, okay? So we're going to go ahead and get on with the program here. Okay, so in today's program, I'm going to go over my equity curve right now and what that looks like, and then we'll talk about the market conditions and how things are showing up in how things are working in the stock market right now. I do have a couple things to say about that. And then I'm going to go through my stock picks for the week that I've narrowed it down to. Of course, as you guys know, I don't buy all of them. These are the selections for the week, and then I kind of watch and observe and see what happens. I keep you guys posted with short videos throughout the week. So you can follow along to see if any of them were successful. And then there is an interesting company that I found this week that I just want to share with you, and not to entice you to look in. I'm not looking into buying this company. It's just interesting what they're doing. And it's part of the things that I love about the stock market is you come across a lot of interesting companies. So there is one that I'm going to share with you at the end of the video. This is what my portfolio equity curve currently looks like. So just to show you the most recent, you can see this. I haven't had much luck lately. I feel like everything that I'm throwing out there isn't catching. I have false breakouts, and a lot of my picks aren't working right now. And when that happens consistently, the answer to that is just to keep pulling back how much exposure you have in the market. Right now, I only have one position open. I did try my hands at another position on a super performer, which I'll talk to you again about today, because I'm probably gonna try again for it. It just wasn't the right time. So you could be in the right stock just at the wrong time, and that's you'll never know. You just have to throw it out there, get a feeler, and see how it goes. But my batting average the last little while has been, oh my goodness, terrible. Just maybe 1 out of 10 trades is working out right now. It's really nasty conditions. And so with that said, I'll transition over to, you can see, before I get away from this screen, you can see that this is what I'm saying by I'm learning as well. So you can see this pullback here, I didn't handle too well. I gave back all my profits back here. So when I made some money back, you can see I handled the pullback a little bit better, and I just got out and I waited. This has been one of my characteristics for learning. I sit out of the stock market when I get hit really heavy. This to me was heavy. I was expecting to at least hold some of the gains. With that said, you can see I made some nice gains here, and I've really learned to pull back on my exposure. I think I was about 75% exposed until I started right around here, until I started getting some red flags. Then I pulled back, and right now I just consistently have been pulling back, and at this point in the game, I'm literally just throwing 1 or 2 feelers out there, and until one of them catch, then there's really no point in continuing on. Let's look at the stock market, and let's look at why the stocks haven't been working out. I'm going to transition you over to this screen here. Here you'll see that the S&P 500, I'm using the futures for no other reason, but it gives me volume. The S&P 500, and you see this nasty sell-off here. See this nasty sell-off? And by nasty, I mean look at the velocity of the drops. The velocity of the drops, and then how much volume was in here selling off. There was a lot of traders selling off. I think there was more sell-offs compared to the last, oh boy, what is this? This is 2023. This goes back as far as 2022. So a lot of nasty selling off over here. Part of it is anticipation of war and this and that. I'm continuing to watch the market, and I'm getting my signals not from the S&P 500, but from my trades and what my trades are doing. So with the S&P, where are we now? So we did have some buybacks here. We did have a good velocity, came right back in. If I look at the weekly, sometimes it helps me because what I'm looking for is what goes under the red, what goes under this 50-day moving average or this 10-week moving average. They're the same thing, okay? This popped down once. Yes, it did have that dip, but look at where it closed. Closed well. So closed poorly, closed well, closed well. So I mean, I'm liking the strength back up. Is that any kind of prediction as to things being okay in the future? Of course not. You can be 100% sure you don't know what's going to happen the next day. Okay, anyone who's trying to speculate and tell you, well, looks like there's a pretty good point here where it could, you can speculate, but you just don't know. Okay. Moving forward into some of my selections here. Wait, before I do that, I do want to talk to you about the VIX as well. This is the volatility index. And we did get a massive blip up here. You can see that on August the 5th. And I mean, that was pretty high. Let me get rid of some of this noise so that you can see it better. Let's get rid of all that. That should be included in that, but that's not. So you can see the last time we really had a big blip up was this is all COVID-19 right here. This is COVID, okay? So there you go. So there is some activity, some fear in the market. This is increasing volatility, and volatility is when the market moves up and down. The more up and down you see in the market, the more volatility you can say it's showing. That's the volatility index. So with that said, let's move into some of the selections for this week. This is the stock that I actually picked up this week, and I did something silly. I did buy this one, and it was a fail. We're on the daily here. I think I bought it out of here, and I put a very tight stop on it because you can see my equity curve isn't doing too well right now. It's been slowly creeping down. So things aren't working, so we get very, very defensive. This is called defensive trading. So I'm going to try this again. I'm going to try to buy it right out of the breakout up here. So the further into the base you are, this is what we call a base. Further into the base you are, like buying out of here, which would be considered either it's a cheat area. This would be a handle area. It's more risky within the base. So if you just want to be sure, you just draw a line across the top. And currently it's making a perfect line out of the base. So I'm going to go ahead and try to see if I can put in a position there. And of course, as far as stops go, this is at the max of about 10%, to put it at the very bottom of the last pullback. Certainly wouldn't want the next one to undercut that pullback. That would be bad news, but sometimes stocks do that. Either way, I don't want to be a part of that trip. So I'll probably likely put my stop below the last day's low, because that also, I want to see enough strength moving out of the gate with big volume, and hopefully something as exciting as either this or whatever. So we'll see. Just so you guys have some attributes of this company. This is a pharmaceutical company. I look at the market, the share floats, which tells me essentially how many shares are in the market. What it tells me as far as my trades are concerned is how quickly the stock could move, how volatile it could get, and some volatility upwards. I mean, would be great. We want asymmetric volatility. We want to cut off the volatility at the bottom and allow the asymmetric volatility at the top to continue. And that's essentially what you're doing. You're putting out little feelers into each of these stocks, and whatever catches, well, hang on to that one, and hopefully it'll make another base, and you can add to a position. But yeah, we'll get into that another time. This is Soleno. Soleno. I've been waiting to get in on this one. This is also pharmaceutical. You'll notice a lot of pharmaceuticals this week. Sectors tend to move together, so I can certainly say it's looking pretty good for the pharmaceutical sector right now. And of course, these ones, when it's pharmaceuticals, we don't worry as much about income statements, but I still like to look. You can see this is the analysts' predictions, their analyst ratings. They tend to be always more conservative, so we always want to see their estimates beat. It's not a good sign to see an estimate missed, okay? You want the company's acceleration to move faster than what the analysts can predict. Considering that the analysts are conservative in their estimates, they certainly don't want to stand out and be penalized for it. So they generally like to stay under what their value is so that their values can be hit and they can be successful in their analysis. Anyway, moving on, Soleno is another one of my selections. You can see the tightening action from peak to trough here on this little handle, we're going to call it. And I really look at this contraction. Goes from 32% to 31% to 18% to 6%. Now, is there anything to say that this can't fail even further? Well, yeah, certainly. I can put in an order there and see what happens. That's all we can do in the market. Summit Therapeutics, same thing. It's a biotech company, which means that they're probably working on something. They're doing some sort of research that is going to be profitable in the future. Same thing with this one. Analysts are all rating it upwards. That's good to see. I'm not seeing any profitable years coming up. I always like to start with the annuals and then go into the quarterly. 2027, we're expecting to see some revenue. Okay, so yeah, some time still, but nonetheless, we follow the trends. And let me take you back here. So this seems to be pushing up at a pretty rapid pace, but we always have to measure that end tail point to see if we're ready. Now, do I want to take the risk on this? I almost do because of the pressure upward here, the high volume on the upward pressure. And it held up pretty well. Let's see where it broke out of. Let's just call it this space here. I mean, that's 34%, and it continued to hold above 61. And it found support after 64, and now it's up here. It's at 100%. And if it gets to 100% within number of weeks, we consider it a power play. This does not qualify because we have 1, 2, 3, 4, 5, 6 weeks. Here should have came to 100% within that 6-week point. So I'm going to go back from my weekly to daily and move on to the next one. So these are all possibilities, guys. It doesn't mean I'm going to necessarily buy any or all or half. I don't know, to be honest. We just have to watch what happens throughout the week, and you guys can follow along if you subscribe to my page. I send out short videos throughout the week to tell you where I am and what I have done. Once there's action, I usually send you an update. If I don't, it's because it just wasn't worth sharing. Okay, so this is another one, Vera Therapeutics. Now, this has been a long ongoing base, and I'm liking the lower lows, these lows becoming higher lows. So this low is higher than this one, and this low is higher than this one, and I like that trend. It would be nice for that trend to continue. And then this tightening action here, 6%, I'd like to buy it out of that break there. Spotify is on my list, and this symbol here to me represents this is a code 3. I put this in when I see, at least on the quarterly here, we see a rise in revenue, income, and margins, or rather, I should say revenue, earnings per share, and margins. Okay, an increase in margin from 5 to 7% is a massive increase in the profit that's coming that they're able to keep, because margins are the difference between the overhead and what needs to be used to run the business and what is kept at the bottom line. So that's a very, very simplistic way of making that definition, but that's essentially what we're looking at. So why am I looking at Spotify? Well, you can see, first off, in comparison to the market trends recently, it did bounce down, but where did it close, guys? It dipped down and closed fantastically. Okay, and I'm also seeing this tightening action here, and that is well below the 8 to 10% that we like to see, which means I can actually put my stop loss right at 3.24% here, right here. If I buy it out of the base here, my stop loss, my technical stop, is going right there. I don't expect it to make a new low below that. And if it does, well, so be it. I get cut out, okay? Can't have an emotional attachment to these stocks, okay? And the last one here is MATX. Again, this entered into my list. Oh, let's go to Spotify for a minute, and I can show you the forecast. So I don't think I did that. Annuals. 2024 is a breakout year. It's estimated to be a breakout year. Look at this. Estimated 6.35% versus last year's minus 3.0. Not percent, guys. Dollar per share. So that's a breakout year. So 2024 should be a fantastic year. Let's see if the quarterly matches up. Always compare your quarters to the same quarter of last year. You do not compare it to the last quarter. Okay, that's a rookie mistake. Quarter 2 here gets compared to quarter 2 of 2023. Quarter 1 gets compared to 2023's quarter 1, and so on and so forth. So look at this estimated 1.95 versus the reported of 2023. The reported is 0.35. That's a massive gain. Let's go down to the revenue. Now this is, so 4.42. And then we go back to this one. 3.55 billion is the reported. Okay. As far as annuals are concerned, I'm not seeing much difference in their growth. Their growth looks fantastic. Don't get me wrong. This is the kind of growth we want to see. But how are they getting more earnings per share? Well, it looks like, from what I'm seeing, the difference between revenue and EPS is they're likely either their margins are increasing or they're cutting out some of the overhead, maybe sending some workers home and laying them off. So that they don't have to pay as much, all kinds of possibilities. We don't know. I just follow the numbers. We're just in it to make some money, guys. Pull some money out of the market, because this is a massive. It's a lot of traffic of enormous amounts of capital moving back and forth. And if you learn how to do this, and if you learn some of the ins and outs of trading, then you have those skills forever, and you can use it to your advantage as needed and pass these lessons down to your family. It does take a lot of work, but you can get there. Okay, now, and as promised, the interesting company that I was talking about is Nano Nuclear Energy. Certainly would have been a fantastic power play if it had stopped here and if it had continued on, but you can see this dipped right down below the 50-day. We certainly don't want to buy it down here. This is not something to buy. It's way too low in the totem pole on the stock price, which means way too few institutional traders are looking for it. It's not something we want to buy. But this is quite fascinating what they're doing, so I still had to share this. Nanonuclear Energy, the first advanced portable nuclear microreactor company listed in the USA. How fascinating is this? And I'll kind of discover it right now with you guys. I saw an image of it on the back of, so they have a nuclear reactor. Is that what I'm understanding? Nuclear energy. Microreactors, look at this. And then nanoreactors. If you're interested in this, you just want to take a look for your own entertainment. It's nanonuclearenergy.com. It's right up here, okay? And let me see what they got here. There it is. Zeus, the nanoreactor. This is wild. You can, I guess, bring it around and use it at factories. It's transportable. Just amazing what they're doing here. And then the nanoreactors. So you got Zeus and Odin. Let's see what Odin looks like. Odin, nanoreactor. Oh, baby. This looks intense. Low pressure coolant reactor. Yeah, fascinating. I mean, they look small enough. They almost look like I can't tell from the scale, but something you'd put onto a cargo ship. Okay, so that's it for today, guys. Follow along this week. Like and subscribe, and I'll keep you posted as to what happens with my trading account and see if anything starts to work. That's it. Have a great week, and I'll talk to you guys next Sunday as I release these every Sunday at 9 p.m. Good luck, and stay safe. The tides are still turning.